Welcome to Nasdaq TradeTalks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you live from SmartCon in New York City. Joining us for this segment, we have Vivek Raman. He's co-founder and CEO of Etherealize. We're here to discuss why institutions are choosing to build on or integrate into Ethereum or other blockchains. Vivek, it is great to have you with us. Welcome to Trade Talks.
Thanks so much for having me.
So tell us about the genesis of Etherealize. How did it come together? What was the motivation there?
So Etherealize is personal for me. I spent 11 years on Wall Street at the sell-side banks. I was at Morgan Stanley, UBS, Deutsche Bank, Nomura. I traded credit products and fixed income products. And it was the most incredible journey, but the technology behind all these products was so archaic and it didn't change over 11 years. So I finally left Wall Street, which is very hard to do. It's a really, really good lifestyle. But I wanted something with technological upside. I found Ethereum right after that. And to me, the product market fit for Ethereum was a platform where Wall Street can finally digitize all its assets, move them onto a public blockchain, and then have them trade and settle in a global manner with the best security, the best uptime. So to me, Ethereum was a very obvious answer to this. I've been working on that for 5 years personally. Wall Street hasn't been ready for 5 years. Last year, when Larry Fink started to say the world's going to be tokenized, when the ETH ETFs got approved, when we got regulatory clarity and tailwinds, I started Etherealize with the backing of the Ethereum Foundation to go around to institutions and help them onboard into the Ethereum ecosystem.
So why are institutions choosing to build on or integrate more with Ethereum over other blockchains? How do you think it compares to other ecosystems?
There's a lot of competition out there. I will say that there's only two infrastructure blockchains, and that's Bitcoin and Ethereum. Bitcoin has become digital gold. There's only one platform that has been up for its entire existence, never had downtime. It's the most secure, it's the most global, has the most regulatory clarity, has the most liquidity, and has the most adoption, and that's Ethereum. So it becomes the obvious choice for when large institutions that move very slowly, but they move definitively with real assets, want to put real assets on a platform with real security. The only choice is Ethereum because of its track record.
So let's talk about institutions for a moment here. What should they be thinking about when they're moving their offerings?
It really comes down to tokenization, which means the thing that brought me into the space is saying if we take assets that are archaic, like stocks, like bonds, like real estate, and we digitize them and put them on a public, secure global blockchain like Ethereum, it's easier for them to trade, it's easier for them to settle, operations become easier. It's like the internet moment for Wall Street, and that's what we're witnessing right now. So that's what they're all trying to do, is tokenize their assets, bring them on chain, and unlock a lot more utility in them.
Just a couple of questions here. Does the infrastructure to onboard institution, does it already exist? Does it need to be built? Are we somewhere in between? And then what does it look like? How does privacy play a role bringing global finance on chain? I mean, we know the technology exists, right? But we also can't skirt around the fact institutions. Privacy rules, whether global, local, regulators, there's a number of agencies. You know how complex.
I do. I know how complex it is, and I love it. I think that there's a lot of things that were not solved before that are now already at the exact same time. And that's why this is the moment period. The technology is ready. You're seeing a lot of mass adoption, both of Ethereum Layer 1 and of companies building their own custom blockchains called Layer 2s on top of Ethereum. You've seen companies like Coinbase launch their own L2 blockchain called Base. You've seen Robinhood start their own blockchain on top of Ethereum for tokenized stocks. You're seeing even global institutions, Ant Financial, Alibaba Group, is deploying a Layer 2 on top of Ethereum. So that technology is ready. It's ready to scale, and it's secure, and it's battle tested, and it's here. Now, the part that needs to evolve very rapidly, which is now happening, is the privacy. Privacy wasn't legal on public blockchain. You weren't allowed to touch privacy things because there was no regulatory framework, and you saw a lot of adverse regulatory actions. That's all changed now. That's all a tailwind, and so we're seeing privacy flourish, and we're building the tools needed for compliant privacy.
Yeah, I would agree with you. I think regulation by enforcement. I mean, I came from, TradFi as well.
Yeah.
Institutional equities.
Yeah.
So certainly people understand that's not the most effective way to. So when you think about the next few years, whether it's Ethereum specifically or the industry at large, what are the milestones? What are you benchmarking success to?
I think we are at the adoption. Blockchains aren't a new thing. They've been around for 10 years. People have tried to iterate on blockchains, public, private, centralized, decentralized. Now is the moment for Ethereum's actual architecture to shine. It's the only global permissionless open network that anyone can build on. So I think some metrics we'll see a wave of new institutions deploying assets, tokenized assets on Ethereum. I think we'll see a wave of new customized layer 2 blockchains, institutions built on top of Ethereum. And I think we're going to see real robust compliant privacy solutions to tie it all together and for blockchains to become integrated into law so anyone can deploy assets into Ethereum. That's where the internet moment actually happens. So I think we're going to see trillions of dollars of assets come on, hundreds of layer 2s, and all of it's going to happen very quickly because it's been a lot of pent-up demand. Now that we have a regulatory green light, you're going to see the real innovation.
Appreciate the insight. Thanks for joining us on Trade Talks. And thanks for joining me from SmartCon. I'm Jill Malandrino, Global Marketing at Nasdaq.